On April 1, 2026, SpaceX submitted a confidential filing to the SEC, starting the clock on the largest initial public offering ever attempted. This chart shows the scale of the ambition. SpaceX is targeting a $75 billion capital raise at a total valuation of $1.75 trillion. That offering is nearly triple the size of Saudi Aramco's record-breaking 2019 debut. For 20 years, retail investors have been excluded from the SpaceX cap table. To build a broader base of support, the company plans to reserve 30% of the shares for the public. This offering would trigger billions in forced buying from index tracking funds and likely consolidate Elon Musk's position as the world's first trillionaire. But the $1.75 trillion price tag rests on a specific mathematical tension. To own a piece of the company, investors are paying a multiple of 110 times trailing revenue. For comparison, when Elon Musk took Tesla public in 2010, the entry fee was much lower. That IPO was priced at just 15 times revenue. 110 times multiple is an outlier in the S&P 500, exceeding the valuation of nearly every established technology firm except for Palantir. This raises a central question for the market. How do rockets, which are notoriously expensive and prone to failure, justify a valuation that dwarfs the world's most profitable software monopolies? The first layer of the valuation is the launch business. SpaceX currently holds a near monopoly on Western orbital access. This chart shows the financial bedrock. Revenue tripled, reaching $15 billion with $8 billion in EBITDA. That represents a 50% profit margin. In aerospace, where established firms like Lockheed Martin operate at 9%, these figures are entirely unique. This cash flow comes from high-volume reuse. SpaceX conducted 165 flights in 2025, 52% of global orbital launches, using boosters flying over 30 times. While this hardware dominance provides the foundation, launch services only account for 1/3 of total business. Rockets alone cannot support a $1.75 trillion valuation. The engine of the current valuation is Starlink, the company's global satellite internet constellation. Subscriber numbers climbed from 1 million in late 2022 to approximately 10 million by early 2026, reaching users across 155 countries. This diagram shows the network's evolution into a mobile carrier competitor. By acquiring $17 billion in spectrum, Starlink launched a direct-to-cell service that makes it the largest 4G provider by land area. Investors are valuing SpaceX based on these recurring subscription revenues, which now provide 2/3 of the company's total income. There is a final, speculative layer to the IPO. The February 2026 merger integrated xAI and the social network X into the SpaceX corporate structure. The synergy here is based on Musk's plan to utilize Starlink's global bandwidth to tower massive clusters of orbital data centers for AI processing. Further out, the valuation includes the potential of the Starship program to enable point-to-point cargo delivery and the first infrastructure for Mars colonization. This $1.75 trillion price tag combines an aerospace monopoly, a global telecom, and a highly experimental bet on the future of artificial intelligence. Pricing a company at 110 times revenue leaves no room for the delays that are common in aerospace. Starship is currently 2 years behind schedule on its lunar lander contract, and a single flight failure can destroy $150 million in hardware. This chart shows the balance sheet risk. The merger added xAI, an unprofitable business with revenue under $1 billion, to SpaceX's otherwise healthy financials. Any technical failure or sustained losses in the AI division would immediately undermine the math used to justify this valuation. The valuation also hinges on the personal management and political standing of Elon Musk. Musk's leadership of the DOGE Commission and his polarizing public profile create friction with federal agencies that oversee $22 billion in active SpaceX contracts. Investing in this IPO means trusting one individual to effectively manage 6 major corporations simultaneously. In 2010, the Tesla IPO offered a 300x return for those who held the stock through its most difficult years. But Tesla was a small startup priced at 15 times revenue, leaving massive room for growth as the market evolved. SpaceX is a generation-defining company, but at $1.75 trillion, it is asking investors to buy in at a peak multiple. It is a bet that the future will arrive perfectly on schedule, leaving absolutely zero margin for error.